I'm not really here to criticize the Federal Reserve, but let me take a moment and say I don't think they had a clue what the long-term effects of such low mortgage rates would be. They just pushed money into mortgages, and we will be for years paying the price in reduced mobility. There will be people who won't take jobs in another city and people who won't leave their little tiny house because they've got the 3% mortgage. And that's going to mean fewer starter homes on the market.
I'm glad you brought that up because, our industry tends to really yearn for the lower the rates, the better, because obviously the volume happens. But yeah, when that party comes to an end, for whatever reason, you're right. The paralysis that ensues afterwards is not something that a lot of people will acknowledge. And some of the youngs don't know anything more than 2 or 3% money. They just don't know. And so 6, 7 just sounds like highway robbery. And it is practically comparatively too much, but it's to us, it's like, oh, well, that's still pretty good.
Even in the corporate world, when the Fed raised interest rate, there were corporate treasurers with 10 years experience who had never seen rising borrowing costs, and they're financing inventory or, other working capital needs. And they're like, we're not used to interest rates going up.